So we're going to jump already to Michael. Michael is on the line. Michael, are you there?
Good morning, guys.
Good morning.
Hey, how you doing there, Michael?
I'm doing great. How are you guys? You guys don't have Rob in there to babysit you this morning, huh?
Yeah,
we
that is
definitely
quite
don't.
true. Windows are probably going to be broken. We're going to have the bills to pay.
Right.
Chris and I are going to be out of control.
Well, speaking of bills to pay, big shout out for Michael. I'll have him talk. Michael's with Capital Title up in the Woodlands, Conroe area.
This is the Michael.
This is the Michael.
Not just
right
any
there.
Michael.
No. This is the Michael up there. Michael, let us know a little bit about what you do up there.
I'm the business development rep for our Woodlands office and our Lake Conroe office. And Lisa Shaver just came on board with us up in our Lake Conroe office. So she and I are going to co-market up there. So we're just trying to capture as much of that business up in the north as we can. It's getting exciting up there.
That is awesome, and you have an absolutely incredible crew up there. And you are with one of the, I think it's the largest independent title company in the state of Texas. I mean,
that's correct. We're actually featured in Forbes magazine this month, so we're very proud of that. It's the largest independent title insurance company in Texas. Really cool.
Wow, that is awesome. Well, we appreciate you obviously being not only a great sponsor of the show, but a great individual and somebody that I work with personally.
Absolutely.
And I know you had said that you had a question you wanted to ask us, and you wanted to put it on air, so you are here available to do so.
Well, Chris, you've been great about coming out and teaching this new QM class to our realtors and to get everybody educated and aware of what's going on and all the changes. But if you could make it clear for everybody, what is QM and how is QM and the 3% rule actually going to affect borrowers now? And I'll sit back and listen to you.
Well, thank you very much, Michael. Again, that was Michael with Capital Title.
Fantastic company, fantastic sponsor of the Real Estate Rat Pack. Michael, we greatly appreciate you and all you do for the show.
Absolutely. To answer his question, QM is something out there called the qualified mortgage. So one of the things that happened is CFPB, which is the Consumer Finance Protection Bureau, they actually are in charge of implementing Frank Dodd Act, and part of that was going into effect what they call QM, which is a qualified mortgage. What they've actually done, and I've said this for years and years, is the pendulum swung very large from one side of the industry, which was give a loan to a dog.
Anybody.
Yeah, anyone,
if you
basically.
Have a pulse.
Yeah, if you had a pulse, you were getting it. To the other side of the industry, which is let's limit lending as much as possible, unfortunately. And so Now, there's a lot of good things that have happened and a lot of good things that have still happened over the years and that are happening even today. Number one, lending is alive, lending is active, and lending is strong. And I mean that by a couple of reasons by saying this is before there was no licensing really in the industry. Now you have to be licensed. You have to have ongoing education. So a lot of the individuals out there are individuals who have gone through that ongoing education, who are licensed through the National Mortgage Licensing System. And what's happened also from an underwriting perspective is things have changed. You can no longer do no-doc loans. You can no longer do stated income loans. There's a lot more strict in regards to self-employed borrowers, et cetera, et cetera. What qualified mortgage actually is intended to do is really a couple of things. One, to ensure that the ability to repay for every consumer is there to create a stronger borrower. Number two, and Michael mentioned this, the 3% rule. The 3% rule is really there to limit the amount of fees a lender can charge a buyer in obtaining a new mortgage. So what they're trying to do is ensure that the client is not being overcharged for services, something that was very prevalent in the past. Okay? And then lastly, the thing about QM is that it's also lowered the debt-to-income ratio standards for conventional loans. So most of your conventional, actually all your conventional standards and your jumbos and even some of your government are now less than 43%. It's 43% or less. What they're trying to do is make sure that borrowers are borrowing within their means.